Morning, Steve Free in Chicago with the morning grain comments. Well, we've got markets right now consolidating after the last couple of days of losses. Yesterday, the funds sold about 35,000 corn, 7,000 beans, and 6,000 wheat. They still have a fairly large, long position in the grains, and I think when we look at the numbers, U.S. corn and soybean balance sheets are getting tighter. If U.S. soybean sales today at the higher end of the trading guesses will have 85% on the books versus the USDA's export number. So many people feel that given the late plantings of the Brazil crop, dry conditions in southern Brazil and eastern Argentina, that China will have to come in and buy more U.S. beans, reducing the carryout. We've seen the last few days farmers in the U.S. selling both corn and beans. The inverse of January futures over November 21 reached $1.20, and so that has pulled back some of the basis levels both domestically and at the Gulf. U.S. corn is still the cheapest in the world, and given the fact there's very little beans available out of South America, U.S. soybeans is also the cheapest until February of 2021. It's interesting that we've seen a break in U.S. futures. Right now, the spread between U.S. hard red wheat export and French prices is only $2 in favor of France, and it's only $5 in favor of Russia. Domestically, EU has a problem with the feed grain supplies and can't import enough corn to satisfy that, so they may have to feed wheat, which would lower their wheat export capabilities. Russian domestic prices are also at all-time highs, and that could diminish some of their wheat exports, even though this week the Russians came out with the first export quota higher than expected, which weighed on wheat prices. Still dry in southern Brazil, Argentina, still dry in the southern plains, and those things augur for some higher prices down the road. We did see the President of the United States sign a executive order banning U.S. companies investing in Chinese companies that have any links with the military. So that may cause an issue there. COVID virus cases in the U.S. is record high, and so we've seen talk about shutdowns, and even in Chicago there is a stay-at-home order. So we'll just see where the bottom is in this correction. I do think wood prices, especially corn and beans, are going higher. For the week, beans are up about 41 cents, testing a high of 11.50 on the Jan beans. Meal's up $1. We did test 4.28 on December. Wheat futures here in Chicago is down 14 cents from last week, but we did test a high of 6.13. We did see that a meal is up $6 and tested 401. Earlier, that 407 was a corn price up a penny, testing 428 on the December. Soybean oil, December's up 176 points and did test 37.32 cents a pound. And with the tightening of the global veg oil supplies, there's still people think that soybean oil could test 45 cents a pound, with U.S. prices now the cheapest in the world compared to like Ukraine sun oil, Rotterdam canola oil, and Brazil soybean oil. As always, these are my thoughts and not those of ADM Investor Services. Have a safe and profitable trading day, and remember, always treat people like you yourself would like to be treated.